All right, we have hit an all-time high again yesterday. A little bit softer this morning. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Fed Chair contender Christopher Waller doubles down on the need for a rate cut as fresh data this morning may support his case. Meanwhile, the Trump administration's campaign against Lisa Cook intensifies as she seeks an emergency hearing this morning to block her removal. And the September scaries. Stock bulls are bracing for what has historically been the weakest month for the S&P 500. Katie?
And of course, we're coming off of all-time highs, so scary stuff indeed. Let's talk about Dell, though. Dell, it raised its revenue forecast for the full year, but you can see that shares are down pretty mightily this morning as it sees a slowdown in AI-related sales. That is the bugaboo of this market. You can see Dell shares down about 6.7%.
I'm also concerned about good genes this morning.
I know.
Watching the gap. It expects margins will shrink this year, a sign tariffs are slowing a recent turnaround story. Shares were down as much as 12% overnight, and now they bounce 3% just 30 minutes until the start of trade, Katie.
Good genes, of course, was Sydney Sweeney's campaign for American Eagle, but Gap came out with its response ad. In any case, we'll get to all of that. Let's start with PCE data, though. It's the Fed's preferred inflation measure. It was mostly in line with expectations when those numbers hit at 8:30. You can see S&P 500 futures. They trimmed losses after the release, but not by too much. Let's break down the data with Michael McKee. He is Bloomberg's international economics and policy correspondent. So on most measures, this looks like it was as expected, not exactly upsetting the apple cart here.
No, apples are all still in the cart today, and there's no real sign of what the Fed should do, except for the fact that inflation still remains elevated. It went up on a core basis to 2.9% year over year, which is not a good look, even if it was a small increase. Core on a month-over-month basis didn't change at all. It was up 0.3%. The headline dropped a little bit, 0.2% on a year-over-year basis, still 2.6%. But the issue is for the Fed, we're not moving in the right direction. So if you do want to cut rates, as a certain Fed governor said last night, you're probably going to need to have a little bit better numbers than this. Now, they're going to they won't have another PCE report before the next Fed meeting, but they do get a CPI report on September 11th. The good news side of this that is good news for the economy, but not necessarily good news if you want to cut rates as well, is personal spending was strong in July, up 0.5%, much of that automobiles, but that pushed up goods spending more than expected. Personal income up 0.4 on the month, and as part of that, wages and salaries jumped to a 0.6 increase from a 1/10 increase. So consumers have more money to spend at this point, it looks like, and every indication is, guys, that they have been spending it.
So for Chris Waller, 3 is the same as 2, at least for now, because he says he's back on team transitory. Are we expecting everybody to be down for a rate cut? And could we even go 50 basis points September 17th?
Well, this data suggests that 50 would be kind of out of the ballpark. Now, Waller is saying that the inflation numbers he's looking at are these numbers, but you take out the tariff impacts because he believes those are one-time increases. So that puts it closer to 2, he says. Now, the rest of the Fed doesn't necessarily do that. We've heard from Eric Schmidt, the Kansas City Fed president, who says, I absolutely won't do any PCE X anything because that's not the experience that people have. And what they're worried about is whether or not inflation expectations rise, which is my tease ahead to the 10 a.m. University of Michigan numbers, which everybody will be watching today. So that rules out 50 probably. The question is, what do we get from the jobs report? And Waller made an interesting point there that he's seeing deterioration in the labor market in the private ADP data that the Fed gets each month, each week. So they are tracking ADP's numbers as they come in, and he suggested in a footnote to his speech last night that things might not be as good as even we think for the August numbers.
All right. Mike McKee, thanks very much. Michael McKee there, our international policy and economics correspondent. Now, Fed Governor Lisa Cook is due in court in about an hour. She filed a motion for a temporary restraining order against President Trump, Fed Chair Powell, and the Board of Governors. The order would allow her to continue working as she fights the president's attempt to oust her from her position for cause. Trump says the court, and I believe he's referring to the Supreme one, should defer to him on the for cause debate. Bloomberg's Washington correspondent Tyler Kendall joins us from outside the courthouse where this initial hearing is going to take place. Tyler, what do we expect?
Yeah, hey, Matt. Well, at 10 a.m. Eastern, this federal judge is going to start to dig into this case brought by Fed Governor Lisa Cook against President Trump, alleging that he violated federal law in his attempts to oust her. And actually, breaking just moments ago, we got our first response from President Trump in a court filing to Lisa Cook seeking this temporary restraining order, which would reinstate her on a temporary basis. He doubles down that determining cause is at the discretion of the president, and he goes on to suggest that he gave Lisa Cook the ability to respond, saying that he publicized his referral and made clear he viewed the allegations as, quote, potentially criminal conduct as grounds for termination. Yet Dr. Cook offered no defense to the charges, not in public or in private. Of course, one of the issues at hand here is that Lisa Cook says that she was not given due process, that she was fired without being able to defend these allegations against her. That's going to be one of the key issues as this court case plays out. The other, of course, as we've been talking about all day here on Bloomberg, is what determines cause. This idea that the president can only remove a Federal Reserve official for cause. Lisa Cook's lawyer say that this does not rise to cause and that the allegations are not true. But in a court filing yesterday, we got perhaps a preview of their defense, saying that if there were any errors on those mortgage applications, they were likely clerical errors, and that Lisa Cook did not have any intent to deceive anyone when it came to this, and that no harm was ultimately brought. Those, of course, intent and harm are two of the factors that the judge could weigh in this.
Well, let's talk a little bit more about the cause that the Trump administration is alleging here. We, of course, heard from Federal Housing Finance Agency Director Bill Pulte sending a new criminal referral against Cook. He really is intensifying here this campaign. This one concerns actually a property in Massachusetts. What do we know about that, Tyler?
Right, so this was in a second criminal referral now that Bill Pulte, the FHFA director, made to Attorney General Pam Bondi in a letter yesterday, and it follows similar allegations to the other mortgage issues that Bill Pulte has elevated, saying that alleging that Cook took out a mortgage on a Massachusetts property and listed it as her second home, but ended up using it as an investment property where she brought in anywhere from $15,000 to $50,000 in income from it. Now, again, these are all just allegations at this point, and while the Department of Justice does say that it is going to look into them, it's important for us to note that no criminal charges have been brought. We're going to have to see how this ultimately does play out. Some have said that perhaps the way that the Trump administration has rolled out these allegations might actually work in Cook's defense, considering you have President Trump saying today that he gave her the ability to defend against these allegations, but then a new one just popping up this morning, and she's already been fired.
All right, Tyler, really appreciate your reporting. That is Bloomberg's Tyler Kendall joining us from Washington. Meanwhile, a U.S. trade policy that allowed free imports of goods valued at $800 or less has ended, affecting global e-commerce and adding costs for businesses and consumers. Everett Eisenstadt, who served as senior advisor in President Trump's first term, spoke earlier on Bloomberg TV.
But it's going to take time. You can't make a change like this overnight and expect everything to continue to move just as smoothly as it is. And your example on these fashion shipments is exactly one of the cases in point, where you have an industry that was built up around this concept that really I'm not even sure is will be able to resolve itself and survive as it did in this new environment. So it's a pretty important change, and one that's going to filter through pocketbooks and companies for quite some time.
Bloomberg Intelligence senior logistics analyst Lee Klaskow joins us now. And Lee, it does look like we're going to see at least a little bit of logistics bottleneck here, or some shipping problems, some postal issues, disruption, I guess is the best way to put it. How do you see it?
Yeah, there's going to be another supply chain dislocation created by this. It's going to impact anybody that sends things or receives things here in the U.S. from overseas. We removed or stopped the exemption, the de minimis exemption for goods coming in from China and Hong Kong in May. We heard from UPS during the second quarter earnings that the trade lane between China and the U.S. was down around 35% based on that and the impact of tariffs. So it's going to impact transportation companies. Some foreign postal services are suspending sending things here to the U.S. as they try to figure out, who and how much, who's going to pay the duties and how much the duties will actually cost coming in.
Think about some of the companies that are affected here. I mean, we've known that this was coming for at least a few months here, Lee. So do you think that the companies in the space that you follow so closely have adequately prepared for this moment?
Yeah, I mean, the best that, companies like UPS and FedEx can do is just reallocate their resources. So maybe they don't need as many, planes to go between Asia and the U.S. or Europe and the U.S. So, that's what they're really going to be doing because, they can't create demand, out of thin air when that demand goes away. It'll be interesting to see what happens and consumers are going to be impacted as well because, that I guess $5 Shein dress that someone might have bought might actually cost $25 now. So that kind of changes the economics there.
Yeah, absolutely, Lee. Great to get some insight from you. That is Lee Klasko of Bloomberg Intelligence. Let's take a check on futures right now. It is the final trading day of August, and you can see that it's setting up to be a down session, even though there's a lot of daylight between here and 4 p.m. But the S&P 500 currently off about 0.3%. This is after we hit a record high yesterday. The NASDAQ 100 off a little bit more, about 0.5%. The small caps holding strong here. The Russell 2000 unchanged on the day, but the color is green. I have to say, Matt, it's interesting to see this kind of non-reaction in futures to what we learned on the PCE front at 8:30 a.m. because you did see pricing for a September rate cut go up slightly. We're sitting at about 88% odds right now, but not helping out futures pre-market.
Yeah, I mean, I was watching when the data came out, the 2-year yield. I was watching S&P futures and I was watching Bitcoin. So you saw a tiny little spike, but instantaneous in risk assets and then a drop in the 2-year yield. It can't be overstated how in line the PCE data came in with expectations. And if you know the CPI data and you know the PPI data, apparently I hear from Mike McKee that you can pretty much exactly figure out what PCE is going to be. So there weren't any surprises, and we weren't expecting any surprises.
Perhaps some folks with money on the line, more sophisticated than you or I, actually did that calculation and placed their bets early because really not too much of a ripple there.
How do you get more sophisticated than you and I?
I keep asking that question. Still haven't found an answer.
Coming up, 2 tech stocks to watch this morning are Dell and Marvell as they see AI-driven demand faltering. We'll explain next. This is Bloomberg Open Interest. Let's get now to high interest. Look what's making headlines around the world. Just weeks after its last quarterly report, Caterpillar is warning investors that it now expects tariffs to have an even greater impact on its business, costing the company as much as $1.8 billion this year. Caterpillar is one of the world's biggest makers of machinery for mining and construction. Alibaba ADRs are rising in the pre-market after the Chinese e-commerce giant reported a surge in revenue from China's AI boom, helping offset a surprise drop in profit. Meanwhile, Alibaba is reportedly developing a newer, more versatile semiconductor that will help China fill the void after NVIDIA ran into regulatory barriers selling its products in that country. And Dell shares are under pressure in early trading as the company booked fewer sales of AI servers than in the previous 3 months and reported disappointing profit margins as well. Despite the decline, Dell boosted its annual outlook and posted quarterly sales and profit that topped analyst estimates, but we're still looking at a 7% drop, Katie, pre-market.
let's talk about why now with Bloomberg Tech co-host Caroline Hyde sitting to my left. So as Matt said, I mean, on its face, okay, it boosted its annual outlook and sales and profit beat estimations here, but missing when it comes to AI server sales. That's not something you can do in this market.
I think exactly. That's the read across from both Marvell and Dell is basically when you're seeing this capital expenditure growth coming from all the hyperscalers, when you see the need and insatiable demand for infrastructure, how are these companies actually showing slower growth? Like more broadly, Dell did book $5.6 billion of AI servers in the fiscal quarter. That's basically half what they booked the previous quarter. And also there is fierce competition in this space. You've got Super Microcomputer here in the US, also a fierce competitor, but you've got other areas where they're seeing just margins get crimped because people are battling for basically scale and taking a bit of a hit in profitability. So we saw a little bit of a gross profit worry more broadly, and you're seeing this slightly slower AI service. But longer term, Dell's saying, look, we're going to book $20 billion over the year. We're actually raising our guidance. And as you said, they beat on the fiscal quarter. So people have got a reason to perhaps sell going into this weekend when perhaps they just are still a few more question marks, a bit of risk aversion going into.
By the way, do people need to somehow buy new computers to use ChatGPT? Mine works fine on my old computer.
Do you not have an AI PC?
Yeah, what is an AI PC? Like, what difference?
It's going to make you just supersonic, Matt, if you're not already. Well, look, this is where I think the compare and contrast is interesting. HP, the day before, said PC sales were much stronger than the market had anticipated. They're actually seeing about 25% of that demand being AI PCs, particularly in the commercial area. So why is Dell not seeing the same ripple effect? So I think there's a bit of worry about market share here and in general enthusiasm around Dell's product vis-a-vis HP. So I think that was why also people are look, why is this part of the business weaker?
Did you know, okay, so Supersonic is a song by Oasis from 1994.
Caroline Hyde is a fan of Oasis.
Yes, you're seeing them on Monday. Don't judge me on Tuesday.
I only know Wonderwall, so in any case, let's talk a little bit more about profit margins, getting us back on track here, because you take a look at the transcript of the conference call. This is something that the COO had to address, really getting questions on the profitability of the AI server business. So there's a lot of question marks here, beyond just the sales numbers.
Of a champagne supernova. How many references should we get in? No, Marvell, I think, I've got a great quote coming from Jordan Klein. We have him on the show often. He's over at Mizuho. And he's saying, Marvell is already hated and having some real company-specific issues. It's basically the best new short idea. This is basically his view that this is a company that cannot fend off competition coming from Taiwanese competitors, but from Broadcom as well. This is a company that was basically making the custom chips for Amazon, for Microsoft, the companies that are spending vast quantities, $400 billion worth in capital expenditure, trying to build their own specific chips so they're not so reliant on NVIDIA. How then are we seeing a flatlining in their AI business for the next quarter? This lumpiness that they're seeing is not music to the investor base's ears. And it is notable on both these stocks, though, Dell and Marvell, 0 sell ratings from the analyst community. Most still say buy the stock. It's just the hedge funds in particular, the ones that have gone in around the trade, have piled back out when you're seeing any sign of weakness.
Yeah, a lot of neutrals, right? Bank America says it's a neutral, and they downgraded it.
A lot of price targets came down as well on the day. From
exactly. A lot of revenue reductions. All right, Caroline, we look forward to
Bloomberg
Tech.
Too?
Yeah, I'm going to join you on Bloomberg Tech. Caroline Hyde.
6 hours. We need 6 hours of that on TV.
That all-important program. Some of the other movers on our radar this morning outside of tech, Ulta raised its full-year outlook after reporting second quarter results that topped expectations. And I was actually just talking with Dana Telsey on Bloomberg Surveillance, and she's very impressed. This is one of the retailers that she likes above all others.
Yeah, it's one of those retailers that, again, it's beauty, and I feel like that's been a little bit more resilient than maybe some of the other categories that fall under the retail category. Let's talk about...
We were talking about a $160 lipstick from Louis Vuitton.
Yeah, I'd believe it. Not what I would buy.
But would you buy it?
No, absolutely not. Anyway, let's talk about a firm. Earnings cleared a high bar, and analysts from TD Cowen, RBC, Morgan Stanley, all boosting their price targets. That is helping to boost the stock, currently up about 16.5% pre-market.
Woof.
Woof.
PepsiCo, what a great ticker. PepsiCo raised its earnings targets for the year as the company's turnaround starts showing signs of progress. And wow, a 20% gain in the pre-market.
Yeah, huge gain in WOOF. One of my favorite tickers, other than HOG for Harley Davidson.
I love HOG as well. I'm getting ready for a pretty sweet trip. I'm going to ride my Fat Bob out to Pawtucket, Rhode Island.
All right, well, wear your helmet. Coming up, Sarah Hunt of Alpine Saxon Woods walks us through seasonal turbulence ahead of the high-stakes September Fed meeting. This is Open Interest. Well, traders are in for an interesting September because the S&P 500 has fallen 56% of the time in September, according to the Bank of America. Next month, we get 2 inflation reads and a Fed meeting that should impact market sentiment. We also get a jobs report. And you take a look at the seasonality, Matt. I mean, September, again, 56% of the time, that is slightly more than average. And we know that September seasonally is a tough time.
Yeah, I use, on the Bloomberg terminal, SEAG. SEAG is how you can look at seasonality. And I was looking over the last, like, if you look at 29 years, which is the longest you can do in the terminal right now, you'll see that the average, the top line there, only 3 months are negative. So the trend is up and to the right, as we know, for equities. But September is the worst month. So down 0.8% in September. I also, last night I was lying in bed. I was thinking about the fact that the markets were up to an all-time high, even though NVIDIA was down.
I was thinking about that, too. Not last night. I was thinking about that on air on Bloomberg Business Week at 2 p.m. But it was amazing to see that.
I immediately jumped out of bed and did RRG on my Bloomberg terminal, because if you look at the S&P and type RRG, you can see a relative rotation graph, and you can see that tech is coming down and consumer discretionary is rising higher. There it is. What a fantastic function. We'll be back with the opening bell in just 2 minutes' time. We are moments away from the start of trading on this Friday. It is the last trading day in August, and we're going to run into a little bit of seasonality. So after the all-time record high we had yesterday, closing above 6,500 on the S&P, we get a little bit of a release today with futures pointing down about 0.3%, down about 0.5% here on the NASDAQ. Russell 2000 futures higher. By the way, August has been awesome for the Russell. It's up more than 6%.
Yeah, it is.
I think the NASDAQ 100 is only up less than 2%. So you've seen kind of that rotation, right? The Mag 7, the Great 8, giving up some of their leadership to the S&P 493. We showed you that rotation graph in the last block, and we're going to dig a little bit deeper into the industry groups that are moving as well over the last month. But it's been a good month for small caps, and the question is, are we going to get rate cuts, which would help even more? Right?
Absolutely. I think a lot of that outperformance probably came on the back of Jackson Hole, with Jerome Powell basically saying we're going to cut rates next month. But let's take a look at some of the individual movers here. We are just seconds into the final trading day of August, and boy, Dell is having a bad day. Remember, it raised its forecast for the full year, but shares are down because it sees a slowdown in AI-related sales. Not something you can say in this type of market. Dell's shares not quite decimated, Matt Miller, but getting there, off by more than 9%.
The Gap expects its margins will shrink this year, so a narrowing gap. A sign tariffs are slowing recent turnaround momentum. Those shares down 10%, so Gap being decimated.
Well,
no.
That was Dell still.
That was Dell, sorry.
But here's the Gap.
The Gap, it's, you know, this is, to me, like, it was down so much overnight that I thought we'd see that at the open again. It was down as much as 12% overnight.
Wow. So,
and what gives? What's with the rebound here?
You know,
Gap?
all of that happened before markets were open. We had time to digest those earnings, and the sun is shining now, and people feel differently.
Yeah, I guess for sure that's the case. Its margins were dragged down by Athleta, apparently.
Interesting.
Are you a buyer?
I am, actually. Yeah. Athleisure, huge. I know that there's some generational divides there. People are gravitating more towards the baggier silhouettes, but Not this millennial. Anyway, we have a great guest coming.
Yes, Alpine Saxon Woods Chief Market Strategist Sarah Hunt joins us after an all-time high. We were, Sarah, up to 6,500 yesterday, and eclipsed that measure, I guess, on hopes that AI capex is going to continue. We had 3.3% GDP growth in the second reading. Everyone is expecting now, I guess, a cut at the September 17th meeting, and no one really cares about Fed independence or firing statisticians when we don't like the numbers. So are you on board with this rally as well?
Well, I think it's pretty impressive that the market could rally with the NVIDIA news, because I think that was one of the bellwethers that's been carrying some of the water for the market rally for quite some time. So the fact that they had, I wouldn't even call it bad news, but it wasn't stellar good news. And I think that was something that the market managed to digest. And I think the revision to GDP higher is not a bad thing either. I think we still have to contend with what's going to happen as the tariffs really sink in, and some of the pre-ordering, which we saw in some of those higher import numbers, may be going away. But we'll just have to see. That's a wait and see right now. And unless we get some bad inflation numbers, the market looks pretty okay here, even though we are going into one of the witchier months.
Yeah, witchier months. I do like that. Sarah, let's talk a little bit about this budding rotation that Matt was just talking about at the opening bell, because it's true. I mean, the small caps had a fantastic August. If you take a look at the chart of the Russell 2000, it's exactly as you would suspect. Of course, it got a big boost after we got through Jackson Hole and Jerome Powell's speech. Is that something that can survive the witchiness of September? Is this another flash in the pan for those small caps?
I think for small caps, it's really going to depend on where inflation goes, because the expectation that rates are going to be cut generally is looked at as being beneficial, especially to small caps, because they're under more financial pressure than some of the larger companies. So it's really, I think the inflation readings coming up, I mean, the PCE was right in line. So that, I think, is not so much of an issue. Had it been higher, I think the market would have taken that in a negative way. We're looking for rate cuts. If you see any indication that labor is stronger and or inflation is stronger at the same time, that may take that off the table for September. I think that would be tough for small caps. So that rotation is fine until and unless we see higher inflation.
What are the industry groups that you like? Do you just stick with the ones that have been winners so far? I mean, do you just continue to add to your Mag 7 exposure?
Well, we've always had some representation in technology, because you really can't not have that. And they are the companies that are generating the most cash and have the most cash on their balance sheets. But there are ancillary plays around that. We've talked about energy infrastructure before. You look at some of the pipelines. There's a lot of stuff that's going on that helps build out this infrastructure. And there are a lot of good companies in the U.S. that are doing fairly well and generating a lot of cash. Quality as a factor hasn't been as good in some cases as some of the other stocks in some of this rally. So we still like quality. So we're looking for cash flow, and you can find it in a lot of places.
Well, tell us a little bit more about those places. I mean, does it cut across industries here? What does the Venn diagram look like?
Well, there is a Venn diagram between the industrials, the energy, and the AI space, right? Because we still have to build out a lot of that infrastructure. And there's a lot of talk about the fact that we're short on power and how that's going to impact going forward. So the companies that are involved in those sort of spaces tend to be companies that are getting favorable investor sentiment right now. But as well, you're also seeing companies in the U.S. The housing market is weak, so that side of the area we want to stay away from. But the consumer is doing fairly well, and some of that spending is coming through. So there are places where you can really see that cash come through, and that's really something that we focus on, like I said, both dividends and buybacks.
What are you looking for? I mean, next week, the jobs number is so important, right, to the outlook for the economy, to the Fed, to the equity indexes. What are you looking for in the jobs number?
That's a tough one. Consensus is down around, I think, 80,000. I think that you've seen so many revisions, and there are so many puts and takes right now in the employment number. I'm not sure I could widely disagree with what consensus is, but it would not be surprising to see a number that was far off one way or the other, because we have had a lot of surprises in the labor market. So I think that that's still also a work in progress. There are a lot of different factors that are going on between immigration, AI, a lot of things that are happening that are hard to separate out each individual component. So we just have to keep looking at data and seeing what we can ascertain from that data. So I think that's something that is, it's going to be a big deal. That's why I said labor market and inflation are going to be the biggest movers of markets through the next 3 weeks before Fed.
Absolutely. Well, not too much longer that we have to wait to get those jobs report numbers next Friday. Sarah, have a great long weekend when you get there. That is Alpine Saxon Woods Chief Market Strategist Sarah Hunt. Meanwhile, we're just about 7 minutes into this trading day, this Friday trading day, ahead of a long weekend. And of course, the final trading day of August, and it doesn't look that good. The S&P 500 off by about 0.3% right now. We know that we hit record highs yesterday, so it's hard to complain in this market. We might get some funkiness ahead of the close, that month-end window dressing. But let's take a look at the individual components right now. Autodesk is your biggest gainer in the S&P 500 right now on a points basis. I have to imagine that doesn't happen all that often, but the software company reported results. They were good. They also raised some guidance as well. That certainly helps. ExxonMobil and then Berkshire are some of your bigger gainers as well. But then you take a look at the downside, and this is the problem. NVIDIA off by more than 2% right now. We've been talking about how yesterday NVIDIA was down, the S&P 500 was higher, but take a look at the rest of the list. Broadcom, Meta, Microsoft, you add it all together, that is weighing on this index at a sector level as well. So let's take a look at that now. You can see that actually there's more green than red, but you have energy at the top. It's just not big enough to drag us that much higher. Healthcare, too, relatively small weightings in the benchmark. Then you go down the list. This is the problem. Industrials off by 0.3%, and then big tech, the tech sector, off by 0.9% right now, Matt Miller. And that is why the S&P 500 is lower at this exact moment.
Yeah, absolutely. And of course, we hit an all-time high yesterday, so the trend is still sort of up and to the right. Coming up, Celsius is getting a jolt from Pepsi. We'll give you the details on that deal next. This is Bloomberg Open Interest.
Welcome back to Open Interest. Let's take a look at this market right now. I was going to say rally, but that's not what is happening right now. The S&P 500 off by about 0.3% if you round. The NASDAQ 100 leading losses on this Friday, off by more than 0.5%. The small caps resplendent with slight gains here. We know it has been a banner August for those small caps, but as we've been discussing, we're heading into a seasonally tough period for the entire market. So we'll see how some of these lines change in the month ahead. But let's get right now to our top calls. Some of the analyst action in focus this morning. And first up, Dollar Tree gets an upgrade over at Telsey after it reported better than expected earnings. The firm says it can gain market share and offset higher costs with its introduction of $2, $4, and $5 food products. Shares up very slightly here. Next up, Marvell Technology is getting downgraded at Bank of America. That's after it missed earnings estimates. The analyst cites lower AI growth visibility. Shares off by a whopping 17%. And finally, we have discount retailer Burlington Stores getting some price target upgrades on Wall Street after it beat estimates. Bloomberg Intelligence says that its stronger mix of brands are attracting middle-income shoppers and driving repeat visits from its core low-income base. Shares down about 1% right now, Matt.
Yeah, they really haven't kept up with the rest of the discounters. You know, ever since you and I were talking about, I believe, TJ Maxx.
Yes.
I couldn't believe how well TJ X had done over the last 5 years.
It's a beautiful chart.
At Burlington has truly underperformed. So TJ Maxx is up 167%, and Burlington only 44%. That's total return, on a total return basis, obviously.
Good, thank you.
Yeah. All right, Katie, thanks very much for that. Now, PepsiCo giving Celsius an energy boost. Pepsi is upping its stake in Celsius, that's the energy drinks maker, to 11% and selling its North America business of Rockstar Energy to Celsius. Bloomberg's Crystal C covers deals for us here at Bloomberg, and she's on this one as well. So, Crystal, thanks for joining us on this Friday in August. What do we see here in terms of Pepsi's interest in Celsius?
So Pepsi already has around 8.5% in Celsius, and now it's upping it to 11%. You can obviously think that, you know, energy drink is one of the most lucrative non-alcoholic beverage categories, and it's interesting that Pepsi does not have a great track record in here. So Rockstar, like you said, as part of this transaction will become part of Celsius, and Celsius will now manage Rockstar, Alani Nu, and then obviously Celsius itself. And it's also a consolidation of the distribution channel. So now Celsius, instead of using like hundreds of different distributors, will be using the PepsiCo distribution. So it's good for both sides. One is getting, like you said, an energy boost. The other one is getting a consolidated distribution channel.
So you take a look at the different market caps here. PepsiCo has a market cap of about $203 billion. Then you take a look at Celsius, it's just below $16 billion. Could we imagine a future where Pepsi just outright buys Celsius? They have an 11% stake now.
That was my biggest question, too. So you can argue it both ways. So if you look at Coca-Cola, they have a stake in Monster Beverage that never turned into, I mean, so far it has not turned into a full-on takeover. So retaining an economic stake while, you know, having the distribution, having the exposure to that category without actually having to manage the whole thing. Energy is quite an entrepreneurial category. You have to constantly come up with new marketing strategy. There are newcomers all the time. So you could argue that it's actually better off for an energy company or energy arm of a company to be its independent entity and have its own flexibility.
You know, it's fun. You're all over every deal that we get, no matter what industry. So in your job, you must learn so much about each of these individual industries when you're doing the deals coverage.
I try, Matt.
It's impressive. It's impressive. So, all right, so where else should we look for energy deals? Like, is there a broader consolidation going on here? Is somebody going to make a play for Monster? Is, you know, Red Bull going to look for other targets?
Red Bull is one of the largest private company there is, just period. And it's a huge company. It's co-owned by
Which, by the way, is amazing to me because it tastes so disgusting.
You know what? I've never had a Red Bull, so I cannot comment on that. But it's one of the
Katie's never had a Dr. Pepper.
I've never had a Dr. Pepper. I've never had an energy drink either. It's just not. I'm drinking literal coffee right now.
Yeah, caffeine works.
Yeah.
What's wrong with that?
But Red Bull, it's everywhere. They own huge racetracks. They're sponsoring major sports stars and all on this drink that like people mix with vodka at discos. I don't really get it.
It's owned by Austrians and a Thai family. So it's a private company. For a long time, there was the most interesting IPO that could happen is this. I mean, obviously, energy drink as a category has been extremely popular. There are a lot of research reports saying how people are trading iced coffee for energy drinks. So this is definitely a category to watch for. Also, to watch for is whether alcoholic makers would want to get into it because there are like AB InBev, for instance, they distribute Red Bull. So there are definitely overlap that would make that deal make sense.
Yeah.
So when we look at the Monster, when we look at Red Bull or any other company in the energy space, the buyer universe for those are actually quite big.
I do just have to go back to something you said. Discos? You're going to the disco?
Well, or whatever you call, I don't know.
Clubs?
The clubs.
I don't know. I don't go there either.
Right. The Limelight. Is the Limelight still open? Is that still a thing?
I wouldn't be able to tell you.
No.
Good. Crystal is also not sure. So let's move on. Let's talk about what the rest of this year is going to look like because you have seen this revival when it comes to the M&A landscape. Also notable that we're talking about this deal on the final trading day of August. So it hasn't exactly been a sleepy summer for deals. How does that set us up going into the autumn, maybe a little bit more active time?
So this is probably the most nerve-wracking weekend for any deals reporter or like M&A watcher. Labor Day weekend, the 3-day weekend tends to be the most intense M&A weekend. A lot of expectation for what could come on Tuesday. Like you said, this summer has been very active. We've seen deals across like the energy sector, the consumer sector. There's been large company like the Kraft Heinz that has announced strategic review. You know, there are a lot that is happening that you wouldn't have expected like 8 months ago or like last year, just because of the change of administration and how people expect potentially there could be, you know, interest rate coming down. So all of that is like creating a very good M&A market. And for us, everybody, every banker, all of them very optimistic about the rest of the year. We'll see whether that comes true, but Tuesday morning would be a very good indicator.
So for you, for the deals team, like every year, Labor Day weekend is
who gets the short straw? Like who works this weekend?
Wow.
The bankers and our M&A reporters.
For me and Katie, it's a Four Loko Friday.
Yeah, we're going to be at the disco.
The disco, yeah. Or the club.
Mixing vodka and energy drinks. Crystal, great reporting as always. Really appreciate your time. That is Bloomberg's Crystal C. Now coming up, there's now more ETFs in the U.S. than there are stocks.
That bears repeating.
That bears repeating. We're going to repeat it a lot coming up next. This is Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what stocks are doing on this Friday. It's the last trading day of August. We see the S&P 500 down 0.4%. The NASDAQ down 0.8%. And frankly, it's kind of surprising that we're not off more, considering the drop that you're seeing in NVIDIA. Look at that, down 3%. So NVIDIA obviously is worth a lot of the S&P. I think 8% of the S&P, 12% of the NASDAQ Composite Index, and that should drag those indexes down when it's off that much. Marvell Technologies off 16%, as we've been talking about, disappointing, especially in the data center business. Dell disappointing investors also with its AI or lack thereof computer sales. Gap finally moving down. It was off 12% overnight, then up 3% at the open. Now it's down 0.5%. Caterpillar, I believe it's the world's largest maker of earth-moving equipment, saying it's going to have $1.8 billion in costs due to tariffs. And then Affirm on the up, right now up 20% as more people buy now and pay later. Katie?
There you go. Affirm having a great day. Let's switch gears here and talk about the ETF industry because it's eclipsed a new milestone. The U.S. now has more than 4,300 ETFs. That is more than the current number of U.S. listed companies.
That's insane.
I know, and you can see that eclipse in that gorgeous chart. Those lines coming together and now breaking apart. Let's get straight to it with James Seyffert. He is senior ETF analyst over at Bloomberg Intelligence. He joins us now with this story. So it's a great chart, and it's a pretty interesting statistic, but does it matter? Is it necessarily a sign of something that you do have more ETFs now than you do have individual securities listed on stock exchanges?
I mean, it's a sign that the ETF industry is growing and the tent is getting bigger. But at the end of the day, like the way I think about it, there's like two main analogies that come to mind. It's like there's more recipes than ingredients out there, or there's more words than there are letters. Like it just kind of is what it is. And we've seen this massive proliferation of a whole host of different products that we can jump into. But yeah, I don't think it means all that much. It's just a very cool statistic to put out there.
It's almost hard to believe that there would be more ETFs than single stocks. Is it because of single stock?
I actually think it is, but I want to hear
ETFs?
James talk about it.
Yeah.
I mean, the single stock ETFs are absolutely a huge part of this, right? Like for the first 15, 20 years of the ETF industry's existence, it was like giving you access to new categories or core products of your portfolio. Now it's a lot of like providing solutions and end things that you want, like leverage single stock portfolios. Every single ETF out there now, it feels like has some sort of covered call or income overlay on it. You can invest in AI, pets, quantum stocks, like anything, you name it, you can invest in it. So the thing is, like, the ETF industry is where the fish are biting. That's where the money is going. So you get this spaghetti cannon effect where people are just throwing as much as the wall, and whatever sticks, and sometimes sticks, it gets billions of dollars. That's pretty successful. So even if a lot of them fail, it doesn't matter. Though a lot of it is kind of like more like throwing something at a fan with what's hitting the market right now. But we'll see. It's a fast-growing industry, and it's the fastest-growing year we've seen for launches this year.
Yeah, and when you throw something at a fan, you know what happens. But looking ahead into the next couple months, and James, we have less than a minute left here, but there's also the notion that if we get approval for multi-share classes where you can issue ETF shares of mutual funds, that we could see 1,000 more ETFs come to this market.
Yeah, I mean, it's going to grow a lot. One of the things that I didn't hit on for the growth is like the biggest growth area are a lot of these ETFs that are launching are actively managed. And if you see all these active managers be able to launch, a share class on the end of their successful mutual fund, everyone's going to try to do that for the most part. And then you did your favorite area, Katie, that we're going to see probably well over 100 different crypto-related ETFs come to market over the next 12 to 18 months. So there's a lot of areas where this is growing, and it's a big tent. It's very successful if you're an ETF issuer.
All right, James, really appreciate you stopping by on this Summer Friday. That is ETF analyst James Seyffert of Bloomberg Intelligence. Because of the Labor Day holiday, ETF IQ will air on Wednesday next week at 12 p.m. New York time. But you can also read all about the ETF industry in my weekly newsletter. That is Bloomberg.com/ETF IQ newsletter.
What a great newsletter.
Thank you so much.
I subscribe.
You should. This is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. You have the NASDAQ 100 now down 1% on the day. NVIDIA continuing to fall out of bed, certainly not helping. But coming up, Fed Chair contender Christopher Waller doubles down on the need for a rate cut as fresh data out this morning helps support his case.
Meanwhile, the Trump administration's campaign against Lisa Cook intensifies as she seeks an emergency hearing this morning to block her removal.
And the September scaries, stock bulls bracing for what has historically been the weakest month for the S&P 500.
All right, we begin with the economic data crossing the Bloomberg terminal. This morning we had PCE, we had inflation coming in bang in line with expectations, and now we're getting University of Michigan data that's actually missing the mark to some extent, unless, well, no, even on inflation, which is good news. Let's break it all down with Bloomberg's Michael McKee. He's our international economics and policy correspondent. Mike, a little bit less confidence in terms of sentiment than we had anticipated. A little bit better current conditions, but not as bad in terms of inflation expectations. Yeah,
it's a minor move. It's probably statistically insignificant that sentiment drops to 58.2 from 58.6 in the preliminary number. Current conditions 61.7 from 60.9, as you mentioned, a little bit better. Expectations 55.9 from 57.2. That's where we see a potential problem developing for perhaps the economy as consumers start to consider what's going to happen down the road. But still, they dropped their inflation expectations to 4.8% from 4.9%, and the 5 to 10-year inflation number goes down to 3.5% from 3.9. So overall, it doesn't signal a huge change in the way Americans are looking at the economy, but it does suggest that they are wary about what is going to happen next, and that may be because more talk of the tariffs came through during the month.
Yeah, and it's interesting to wrap this data together with what we got at 8:30 this morning, which Matt mentioned, of course, those PCE figures coming in bang in line with estimates. Not too much to make of those numbers in isolation, but when you look ahead to next week, to 7 days from now, when we get the jobs report, the fact that we pretty much had inflation come in as expected today, how does that alter the stakes, if at all, for next week?
Well, the really good news is Monday's a holiday, so we only have 4 days of an enormous amount of data next week. ISM Manufacturing starts it off on Tuesday, but it's the jobs report on Friday that will really get people's attention, because the Fed has made a big deal out of following whether or not the economy is slowing down in terms of the labor market. And the unemployment rate hasn't changed much at all, but the number of jobs created certainly slowed last month, and then we had the big revisions to May and June. So the market will be watching that closely. The Fed will be watching that closely. And last night, Chris Waller made the case that if we see a bad decline in the labor market in that report, he could maybe even support a 50 basis point cut, although that's not his base case. He went on to note this, though, that the ADP report, which we'll get Thursday because of the holiday instead of the usual Wednesday, ADP sends their data on a weekly basis to the Fed, which uses it to create its own index. And he said in a footnote to his speech last night that the ADP data has been deteriorating all through August. So maybe that's a hint that we're going to get some bad news. Don't know, but that is something to keep in mind.
Well, it'll certainly up the scrutiny on those ADP figures, usually just seen as sort of the appetizer to the non-farm payrolls print. Mike McKee, great to get some time with you. That is our international economics and policy correspondent. Meanwhile, Fed Governor Lisa Cook is due in court at any moment. She filed a motion for a temporary restraining order against President Trump, Fed Chair Jerome Powell, and the Board of Governors. Now, this order would allow her to continue working as she fights the president's attempt to oust her from her position. Bloomberg's Washington correspondent Tyler Kendall joins us from outside the courthouse where the hearing is taking place. And Tyler, I'm taking a look at our top live blog on the Bloomberg terminal. It looks like Lisa Cook's lawyers have arrived there. What is the latest on the ground?
Yeah, hey, Katie. So this hearing is about to start any minute from now. As you mentioned, we can confirm that Lisa Cook's lawyers, including Abby Lowell, are inside of the courthouse. But at this moment, it does not appear that Lisa Cook has arrived or that she is set to intend. But it's going to be something that we're watching very closely, because today is all about Lisa Cook trying to seek what's known as a temporary restraining order. And you outlined some of it there. This has to do with reinstating her into her job on at least a temporary basis as the broader legal case works its way through the legal system. And now that broader legal case really does have to do with this issue of cause. We are going to talk about cause a lot at this point because Lisa Cook is alleging that President Trump violated a federal law that allows him to fire Federal Reserve officials if there is sufficient cause. Cook's lawyers say that there isn't, though we did get some glimpse into perhaps the defense that we could see in a court filing from her legal team last night that said that the allegations of mortgage fraud against her are not true. However, if there were any errors on her mortgage applications, that's perhaps due to a clerical error, and that Lisa Cook did not have the intent to deceive anyone and that no one was harmed. That is known as a legal standard known as materiality. I bring that up because these are some of the factors that the judge may be weighing here. I also wanted to bring up that in the last hour, we heard from the Trump administration itself in a court filing defending its invoking of cause here, defending its legal argument in this case. And I wanted to read just a brief part from the president's statement, which says that it is up to the president's judgment about what constitutes cause. It's not subject to judicial second guessing, he says. And even if some limited judicial review were appropriate, it would be necessarily highly deferential to avoid casting any sort of constitutional doubt on this matter. So as you can see, the Trump administration is really digging in here and leveraging the executive branch's power in its arguments.
All right, Tyler, thanks very much. Tyler Kendall there in Washington. You can follow developments on the hearing with your Bloomberg terminal. Just type TLIV GO, or you can go to our website, Bloomberg.com.
There you go. Great place to go. I do want to point out some reporting from CNBC just now that Lisa Cook is retaining access to offices and devices there. Of course, we'll expect to get more news as it trickles in, and we'll bring that to you. But let's turn back to these markets right now, because sitting to my left, we have RBC's head of derivatives strategy, Amy Silverman, and she sees trouble under the surface of the markets, writing, quote, "I've had to bring back my paddling duck analogy for the market. Calm on the surface, but rotations underneath." Amy, this is great because we were actually looking at a rotation chart on the terminal earlier today. It kind of looks
RRG Go on the Bloomberg terminal.
Yeah, for those following along at home. Kind of looks like a hurricane, but this is what we've been talking about, that, okay, looking past just the surface level of the S&P 500, there's a lot going on underneath the hood.
Those little tiny duck feet are, they're paddling away. And yeah, it's difficult to see it when you look at headline VIX, when you look at index volatility levels. They all look very calm and smooth. But I think if you're a single stock investor, you feel that viscerally with the rotations. And that can be factor driven. That can be, small cap versus large cap, growth versus momentum. We've seen multi-standard deviation moves in these trades through this entire year. And likely this continues, Katie.
We actually had a story out yesterday about hedge funds shorting VIX futures, which I thought was crazy because we were at 14 on the VIX. How much lower can we go?
So what I would tell you is it's not just about the headline VIX. It's also about where realized volatility is. And, sometimes you look at that VIX and you say, wow, 14, 13 handle, but then you have a realized at 8 or 9. So when you kind of look at that premium, they're always looking at that in terms of what you're selling against that premium to realize. So essentially what has happened in the past. And it's been kind of a nothing burger, even though I think we had expected a little bit more of a August volatility pothole considering what happened last year. It's the last day of August, I think, and we have
so many nothing burgers. August is all about what you expect to be a big, juicy USDA, like Angus steak burger. It turns into absolutely nothing.
Burger.
I mean, Lisa Cook threatened Fed independence under attack, and yet rates do literally nothing.
I find that specifically pretty interesting because I think of the left tails that are priced into the market right now. And to me, if you think back to the temper tantrum the market had when Trump was potentially going to fire Powell, I guess my question is, how is this different in the sense that the ultimate question is about Fed independence? How is this a different scenario from that context versus Powell, and yet the market had an absolute tantrum during one of them, and again, a nothing burger in the other? Now, could this just because we're in August, it's a little bit of a liquidity vacuum? Perhaps. You're starting to see those option prices tick up and skew. You're starting to see that left tail get a little bit more antsy.
a little bit more antsy here. It feels like we're completely not antsy right now, so that would make sense. But talk to us about the trajectory of the rest of the year, because as Matt said, I mean, we've seen a lot of risk events in the past couple of weeks. It doesn't feel like really there's been too much of a fuss over any of that. But then you think about just the first couple of weeks of September. We have 2 inflation prints. We have a jobs report. We have a Federal Reserve meeting, which, to the point that we're talking about, is going to be highly politicized. Are you seeing any sort of grab for protection there?
Yeah, and maybe I would add one more data point to that, which is even though September we don't really have earnings kickoff in earnest, you do have a lot of conference season starting. So you start to get a lot of those single stock data points, companies, management teams maybe saying, you know, my customer not doing great. You're starting to see that evidence in essentially the demand for protection. But, you know, listen, I'll tell you one thing, which is this has been the same exact narrative since Liberation Day. And the issue is the risk to most investors have still been that they've had to play catch up. And that's why I think, you know, it's a little bit of a false tell, because that right tail has actually been more risky. And most investors I talk to have been playing catch up, and they really don't want to get wrong footed on the right tail still.
Absolutely. And I do want to ask, I mean, what is the hedge in this market? Are we looking in the wrong place? Because, I mean, you think about gold, for example, it's at record highs, but it's been going nowhere for a few months. It seems like
flat
people,
since Liberation Day.
Exactly.
Yeah.
It feels like folks aren't really grabbing protection when it comes to the Treasury market. That hasn't exactly been a haven trade. Is it in the derivatives market, in the equity market, that people are trying to find those hedges, or is there just simply not demand across asset classes?
Well, I'll give you one trade that I think is interesting, which is obviously right now, I think the hope is that you're going to get a little bit more of a breadth widening small cap play. We've seen that in IWM. Essentially, the call skew is steepening. All that means is there's really starting to be that pickup of demand for upside. I've seen this movie a lot of times, okay? It's a little bit, you know, Boy Who Called Small Cap. And so, like, I'm still kind of skeptical. And I guess what I would say is the move we've had in IWM post-Jackson Hole, was that it? Or is there more? If you're in the camp that that was actually it, and actually there's going to be more labor problems, economic slowdown, selling that call wing right now makes a lot of sense to fund downside protection. So you're getting it in a relatively inexpensive way because of the fact that people are really getting ready for the small cap boom.
Yeah, we've been here before. To your point,
yes,
many times.
Many times.
Plenty of false dawns for those little guys. Amy, great to get some time with you.
Thank you.
That is Amy Wu Silverman of RBC. Meanwhile, let's take a look at some of the single stocks moving this hour. We're, of course, keeping an eye on NVIDIA. Shares extend declines down about 3% at this moment, which goes a long way to explaining why the NASDAQ 100 down about 1% a little bit earlier. Yeah, absolutely. Dell also not helping. It's absolutely decimated today after the PC maker booked fewer sales of AI servers and reported profit margins that fell short of estimates. And more bad news. Marvell Technology also dropping on a disappointing read from its data center business. Shares down almost 17%. Not really as much fun as when we were talking about Wolf a little bit earlier. Yeah, or when everybody was so bullish NVIDIA yesterday. Like, even when the stock was down, every single person we had on. The price targets were coming up. Price targets, like more than 10 analysts were raising price targets yesterday, and everybody was like, you know, investors are misreading this. It's actually such a bullish outlook. And feels like a long time ago. Yeah. Coming up, another stock on the move this morning is Caterpillar. I think I can safely say nothing to do with artificial intelligence. We'll take a look at the world's biggest maker of earth-moving equipment as it sends a tariff warning to investors. This is Open Interest. Let's get now to high interest to look at what's making headlines around the world. The energy drink market is getting shaken up as PepsiCo boosts its stake in Celsius Holdings. It's a $585 million deal to raise its stake. As part of the transaction, Celsius acquires PepsiCo's Rockstar Energy brand in the U.S. and Canada. And Ulta Beauty is raising its full-year outlook after reporting second quarter results that topped expectations. But the beauty retailer is warning of a potential pullback by consumers. And you can see here over the last 2 days, the shares are down 4.3%.
And let's get to Caterpillar. Just weeks after its last quarterly report, the world's largest maker of earth-moving equipment is warning investors it now expects tariffs to have an even greater impact on its business, costing the company as much as $1.8 billion. Caterpillar shares, you can see, over the last 2 days down 3.1%, Katie.
Yeah, let's get a little bit more on Caterpillar, warning of those larger than expected tariff headwinds. Bloomberg Intelligence industrials analyst Chris Gelino covers the firm. So specifically here, we're talking about approximately $1.5 billion to $1.8 billion in terms of a tariff hit for 2025. That was previously $1.3 billion to $1.5 billion. So again, we're just weeks out from that previous forecast here, Chris. Why do you think the company is taking this approach now?
Yeah, so as you alluded to, tariffs will be a slightly bigger cost headwind this year than they had previously anticipated. And the revision really seems to be driven by additional clarifications around the Section 232 steel and aluminum tariffs and reciprocal rates on India. As you mentioned, you're looking at potentially up to a $1.8 billion impact in 2025. That's up, $200 to $300 million from their prior view earlier this month. So while we're looking at incremental costs this year, we think it's pretty easily digestible for CAT and probably, more transitory in nature, as they really haven't implemented significant cost mitigation or pricing actions yet. I suspect you'll see kind of more of those measures start to flow through in 26 and really, they could probably offset the majority of this impact.
What does CAT's footprint look like in terms of manufacturing, Chris, in terms of where it sources parts, especially mechanical parts, and also where it gets steel and aluminum?
Yeah, so they have a footprint everywhere, right? They are the largest manufacturer of heavy equipment in the world. They generate, roughly half their sales here in North America and half international. In terms of where they source from, they do get a lot from the U.S. They're actually a net exporter out of the U.S., but they do import components from a number of countries. Some of the big ones are China, Mexico, Brazil. They import some engines from the U.K. and then India as well.
And is there something to be said for Caterpillar not waiting until their next earnings report to give this update? I'm reading reaction, for example, from a Baird analyst actually saying that while tariff headwinds remain a challenge, we appreciate the proactive approach here. Chris, I wonder what you make of it.
100%, right? To have the increased transparency as soon as you have the data available, that's always appreciated by investors. At the end of the day, yes, we're looking at incremental cost headwinds this year. I don't think it ultimately changes the narrative. We're still pretty optimistic that earnings will bottom this year. There's a number of cyclical and secular tailwinds that we think will drive higher earnings into 26 and 27. The backlog's at a record level. We've seen very solid order trends over the past few quarters. Dealer inventory is still quite healthy. So these are all positive leading indicators. And getting this information to the market as timely as possible is certainly appreciated.
All right, Chris, great to get some time with you on this Friday before a long weekend. Christopher Cialino there of Bloomberg Intelligence covers Caterpillar for us. Mm-hmm. And it's nice, isn't it, to focus on a company that doesn't make microchips in Taiwan.
Or provide software solutions or something along those lines. I will say in the grand scheme of life, talking about the proactive approach that Caterpillar is taking, it's only been a few weeks since they gave that initial guidance. Now they're updating it with bad news. 3.5% isn't that much in the grand scheme of life.
They've been doing well this year, right? They're
Absolutely.
Up like 20% year to date.
Yeah, total return, we're a total return household, up about 17% in 2025, outperforming the S&P 500 handily, also outperforming the industrial sector overall. So this is a company that, investors have been rewarding.
I think if you click on the 5-year, I like to look at the 5-year.
Let's do that.
You'll see that they've done very well over the last 5 years as well. In fact, the shares have tripled in the past 5 years if you kept your dividends and spent them on stuff at like Bath and Body Works. But if you reinvested, you would have a 222% gain.
Can't really complain with that when you consider that the S&P 500 only higher by about 98% in this time. It's always interesting to see, the idiosyncratic stories. Who is actually outperforming? And I don't know if a lot of people would have said that Caterpillar is doing that.
The world's largest maker of heavy equipment, as Chris Cialino reminds us. Not just one of the biggest, it is the biggest. Still ahead, tariff uncertainty also impacts the boating industry. We'll talk with Steve Menneto, Malibu Boats CEO, ahead of Labor Day weekend. This is Bloomberg Open Interest.
Welcome back to Open Interest. Let's take a look at this stock market. We're about an hour into the Friday trade. The S&P 500 deepening losses right now. You can see we're now down 0.7% on the big benchmark. Look at what, though, is trying to turn this index green. Not doing a great job. Berkshire Hathaway higher by about 0.8%. That's not going to be enough, contributing less than a point to the S&P 500. Autodesk also having a great day, lifting the benchmark a little bit here. But let's look at the downside, because this is where all the action is. NVIDIA off by about 3% right now. Those losses deepening. You also have Broadcom, Microsoft, Meta adding to losses here. Broadcom was one of the names that was moving higher yesterday, helping us finish at a record high, but it's a different story on this final trading day of August. Then you take a look at the sector breakdown as well. We're looking month to date, which is super fun. Communication services is your big winner in August, higher by 5.7%, followed by consumer discretionary, also putting in a banner month, up about 2.7%. But look at the downside. There were more green bars than red bars in August, but industrials, real estate leaving losses. Coming up next, Malibu Boats will speak to the CEO. This is Bloomberg.
A number of things have stabilized. I think sentiment and confidence has stabilized since probably early April overall. Obviously, we've seen the equity market rebound significantly. So I think people are just feeling somewhat more confident.
That was the CEO of Brunswick, Dave Folks, speaking to us last week. They are the biggest maker of recreational boats, I believe, in the world, but they don't play in the space that Malibu Boats absolutely dominates. That's wakeboard towing. The company says it's been a challenging period for the marine industry, shaped by a difficult retail environment, heightened tariff uncertainty. Obviously, high interest rates don't help, but that may all be turning around right as Steve Menneto comes to the end of his first year as the CEO. So, Steve, first of all, happy Labor Day weekend. Great to have you here on this Friday.
Good morning,
I'm
Matt.
sure everybody's looking forward to getting out on the lake and jumping on some skis. How do you see Malibu Boats after you spent a year there, and as we come to like an inflection point maybe for rates? Is that important to you?
Yeah, rates are important to us. I see Malibu Boats in a good position, Matt, honestly. As we are, looking at the market and the consumer is still struggling a little bit with the elevated rates and so on, we're in a good position. We have capacity. We've invested in our capacity over the last few years. We have new models. We have 11 new models coming out in model year 26. We're excited about that. Got a great team, really, top line of our dealer network. So we're in great position for when there's a little bit more consumer confidence. There's a little bit more stability, as Dave's kind of, snapshot there gave. It's kind of more of the same for 26, at least the start of our fiscal 26, before the consumer really revs up and starts getting back to the full-blown, buying new boats.
Talk to us about the mix, because as I said, you dominate wakeboard towing. We're looking at some sweet video of that here, but we also saw some big, outboard fishing boats, and I know you have stern drive business as well. Where else do you want to take market share?
Yeah, we play in a lot of different categories at the premium level. So when you look at our saltwater fish categories with Pursuit, Cobia, Pathfinder, those brands play at the premium level. We've been taking share in those brands. We've had new boats introduced in those brands. We actually just introduced our Pursuit S388, which is a phenomenal boat. Been able to spend some time on the ocean with that boat, and we're excited about where that's going. Our Cobalt line is another big lake boat, but also foraying into the saltwater fish area as well. And we're gaining share in our stern drives. And then in the towboat segment, we've been the category leader for a long time. And that really takes the innovation that we're committed to and the continual pursuit of making a great towboat.
Because you play in kind of the luxury or the high-end segment, I'm sure that most of your ownership is through individuals purchase boats. But I wonder about the growing category of boat sharing, these clubs that people are hearing more and more about. Is that a growth avenue for you?
That is a growth avenue for us. We do participate in the boat club. It's kind of called the boat club markets. We supply boats to the boat club markets, and it's a great way for families to enjoy time on the water. And we're a good supplier to that type of business.
How does the consumer look to you, Steve, as we get closer to rate cuts? Obviously, if rates come down, that's going to make it easier, more affordable for people to buy into the boating hobby. Is the consumer strong right now? Because we worry a little bit about the labor market.
Yeah, the PCE that just came in this morning, right? The inflation's a little bit up still. The consumer is strong. Their balance sheets are strong. It's the consumer confidence in where the economy is going. Interest rates are still a little elevated in our space. We're excited if the rate cuts happen. There's been a lot of rumors and promises about rate cuts, but we actually have to see them. But I think once we start to see them, the consumer confidence will come back. The desire of being on the water, being out with your family and friends, and being outside, doing activities behind the boat has not died. It's just we're looking for that desire to turn into demand a little stronger than what we've seen, and I think we're back in that growth mode again.
What about the tariff situation? I mean, you were at Indian before this, and I believe at Malibu Boats, you're just as much of an American manufacturer. So does it hurt you at all, or is it maybe even a tailwind?
Tariffs for us are still there. It's about 150 to 300 basis points of cost of sales that we'll have to incur. But we're doing everything we can with looking at our efficiency of engineering, our efficiency of manufacturing, working with our suppliers to make sure that we can, mitigate passing much of that on to the consumer. So we're working every day to bite into that tariffs, but we're not as impacted as tariffs, like you said. We're predominantly a U.S. manufacturer, and we predominantly get our supply chain is North American based. So. But it's about that 150, 300 basis points impact on our business.
What's the seasonality like? It strikes me that you're the last two businesses you've run probably a lot more popular in the summer months, spring and fall as well, but less so in winter. What's your revenue stream look like when it gets cold out?
Yeah, when it gets cold out, we do take the dip. But think about how we're positioned. We do a lot of business in the saltwater market, so it's boating year round, when you think about the saltwater markets. But yes, because we sell to big lakes, riverways and so on, we're affected in that, off season, so to speak, as we enter Q3 and Q4 of the calendar year. We slow down a little bit. Q1 and Q2 is a stronger period of the calendar as we head to boat shows and the beginning of the boating season up north. But we're year-round boating in the south.
Steve, great to get some time with you. Really appreciate you joining us. Steve Menneto there of Malibu Boats, giving us the lowdown on the boating industry and his company specifically. It excites me.
I know. Yeah,
it's
you're a boat
lot of fun. Well, not just boats, but motorcycles.
Yeah, things that go
Steve,
fast.
for me, is like a great interview to get because he's run both of those businesses, and
he's the whole package for you.
Yeah, I just struggle to. In the winter, I guess I can ski, but it's not it's not really the same thing.
No, it's definitely different. I do ski, but I don't go on boats, so that speaks to the differences there. But great conversation, of course, ahead of the long weekends, which we are all thinking about. Everyone who's watching sure is. I'm too. But let's take a look at these markets. Why not? It's the final trading day of August, and we could see some month-end silliness as we get closer to the close. We'll see what that means, because right now the S&P 500 off by about 0.6%. We hit those all-time highs yesterday, now coming back a little bit, but It should be gains for August unless something crazy happens, which would be the 4th consecutive months of gains for the S&P 500, I believe. The NASDAQ 100 also in the hurt locker today, off about 1% as NVIDIA losses deepen. And then you take a look at the bond market, a little bit of a sell-off. People not exactly offsetting their losses there by grabbing some Treasury protection. The 10-year Treasury yield higher by about 2 basis points right now, Matt.
Hurt Locker.
Hurt Locker.
What a phenomenal film. Have you seen it?
No.
You haven't seen The Hurt Locker?
Phrase, man.
All right.
Anyway.
Definitely check it out because I think Michael Hartnett actually stars in that movie.
From Bank of America?
Yeah. Let's get a look at what's coming up on the other side of this break. Wait, first off, single stocks.
Yeah,
we've been talking about the
some-
Gap all day.
I know, but it's higher now.
It's higher. It was lower. Not as bad as overnight. It was off 12%. It says margins are going to shrink this year. The movement in Gap stock is simply a mystery to us.
Simply a mystery. Traders deciding how to feel, but JP Morgan did boost its price target on the stock to a street high of $32. Here's some good news. Woof, PepsiCo surging after it raised its earnings targets for the year as the company's turnaround starts to show signs of progress. That's worth a 17.5% gain.
We couldn't say any more about Celsius.
But let's try.
But we will. Celsius climbing after Pepsi boosted its stake and sold off its Rockstar Energy business in the U.S. and Canada. So there's a deal at the end of this weekend. And as Crystal C tells us, Labor Day weekend is a hot time for M&A.
Yeah, those deal makers not taking the long holiday. It is an interesting sort of structure, though, as we discussed with Crystal, whether or not they could just do a takeover of Celsius. But it seems like right now they're happy to just have some economic benefits. But coming up, summer may be winding down, but travel shows no signs of cooling off. ResortPass CEO Michael Wolff joins us next. This is Open Interest.
With summer almost officially behind us, the travel industry is turning to the fall. ResortPass CEO Michael Wolff says demand isn't slowing down, but a lot of it is going local. He joins us now here on set. Michael, great to have you here in studio. Yeah, I thought it was interesting that so I could see using a ResortPass when I'm on vacation. If I'm going to go to Cabo and rent a house, I want to hang out at the resort for the day, I'll use your business. But a lot more people are using ResortPass for where they live now.
Yeah, the vast majority of our experiences are actually local. So for a weekend like Labor Day, 80% of the usage is people in their home markets. And I think it's because 3 times as many people will travel within 50, 100 miles as will kind of farther afield. So people want this experience locally. They want to have this moment of rest and recharge, but they're doing it locally.
That's a really interesting trend. And I mean, is there any seasonality factor to that? I mean, is it just natural that people travel more in the summer and that maybe they would grab more of these day passes then?
I think so, but we're also seeing that the shoulder season, so kind of going into September, October, is actually what we're predicting some of our fastest growth of the year. Because I think people might have their longer vacation in the summer, but they don't really have time off until maybe Thanksgiving or even the holidays. So they kind of want to take advantage of like a single day off, a single moment, of rest.
What kind of demand do you see in the winter? Because we were talking about all the things that we love to do in the summer, which also stretch to the shoulder season, as you say. But in the winter, it's just like skiing and that's it. Someone wrote in and said try snow biking, which I don't know what that is, but I'm going to try it.
Well, we have a lot of other activities on the platform. And the way to think about it is that the hotels want to attract locals year round. So some of the use cases might vary. So for example, spa is one of our fastest growing categories, and that's very much a year round. Events that happen at the hotel. We're doing a lot more with just creativity. The hotels have all these incredible spaces, and now we're partnering with them to come up with really interesting events, whether holiday light seasons, outdoor spas, watching a football game, by a pool. So there's kind of a variety of things that we're doing that kind of make it more of a year-round product.
So who are your competitors here? Because, my knee-jerk instinct was to compare you to Airbnb, but that's not exactly apples to apples.
Yeah, I think we're actually very much a complement to Airbnb. So while we've been talking about the local use case, a large part of our business is also travelers. They're staying at an Airbnb, but what do they want to complement that with for a day of that trip? Maybe hotel amenities. Or they're one of the 3 million people who check out of an Airbnb every day, check out at 11 a.m. Where do you go? And so instead of sitting at the airport the rest of the day till your flight out at 9 p.m., you now have a day of amenities. So Airbnb is actually very much a partner of ours with the entire short-term rental space.
You have a couple thousand partners, right? Four Seasons, Fairmont, Waldorf Astoria, the list goes on and on. Are you building on that? Are you increasing your partnerships? And what's the growth look like?
Yeah, very much so. You know, since I was here a few months ago, we've added an additional 500 hotels just in the last few months. We're developing MSAs with some of the largest hotel brands, but we now work with pretty much all of the major hotel brands in the world. And a lot of our expansion is not just domestically, but as we explore some of the other international markets.
What do those conversations sound like when you're establishing partnerships with new hotels? Because I have to imagine some of the more upscale, really exclusive type of hotels that are out there might not want to have people just coming in for the day.
You know, I think what's interesting is that a lot of those upscale hotels already do have people coming in for the day, often maybe at the restaurant and maybe at the bar. And I don't think traditionally the overnight guest really knows if the person sitting next to them at the restaurant is sleeping in room 312 or lives down the block. In fact, I would say it adds a lot to the experience to have locals kind of intersecting with kind of the travelers, gives you a more authentic local experience. So at this point, you know, we have the pleasure of working with truly the most luxurious hotels in the world, and they're able to charge a higher rate for the access to the property because it's incredible amenities, but it's been an incredible, you know, fruitful relationship, and, you know, our retention rate amongst our partners is virtually 100%.
Michael, away from this specific business and more to business in general, we have more CEOs watching Bloomberg than any other network. And you are a CEO who's run a number of businesses. Do you have any leadership tips, any culture tips, anything that you put to use every time you go and run a new business where you know you can get success?
It's all about the hiring. You know, I think there's a lot of talk about building company culture once people are there, and there are things, of course, you can invest in. But by the time someone enters your business, they're an adult. They're kind of a fully formed person. And so I spend a lot of time, sometimes up to 70% of my day is recruiting and really spending a lot of time with our candidates, because it ultimately is the people that's going to drive the success of our business or any business.
All right, Michael, great to get some time with you ahead of what's going to be a busy weekend. That is ResortPass CEO Michael Wolf. Now coming up, the buy now, pay later giant Klarna is moving closer to its public debut. Will investors want to pony up? We'll explore. This is Open Interest. Fed Governor Lisa Cook's hearing is underway in Washington. She is fighting to remain in her position as the president moves to oust her. So far, there's been a lot of discussion revolving around what for cause means. Let's explore with Bloomberg's Washington correspondent Tyler Kendall joining us from outside the courthouse where the hearing is taking place. Tyler, what's the latest?
Yeah, hey, Katie. Well, the arguments are well underway here at the federal courthouse in Washington as Lisa Cook is trying to attain this temporary restraining order, which, as you said, would let her stay in the seat. But it was interesting enough to hear from her lawyer, Abby Lowell, tell a judge earlier that they are not expecting the Fed to act today or until the court rules. And that's now raising the question here on if a TRO is even necessary, if Lisa Cook can just maintain her position for the time being. Now, as you said, at issue here really is what constitutes cause. And while this hearing doesn't have to do with that broader legal question, we are starting to get a sense of what those arguments are going to look like when this full court case plays out. We heard from Cook's lawyer saying that cause really should be related to malfeasance while in office, and he noted how these allegations happened before she ever became a Federal Reserve governor. He also had an interesting quote saying that the Trump administration has used fraud as a, quote, weapon of choice for officials that they don't agree with, clearly trying to broaden this out when it comes to defending against the Trump administration. Matt and Katie, we did hear from President Trump in a court filing right before this hearing began. It really focused on this idea that it is up to President Trump to decide what contends as sufficient cause. It's going to be something that we're watching very closely here in Washington.
All right, Tyler, looking forward to following your reporting throughout the day. That is Bloomberg's Tyler Kendall with the latest in Washington. And of course, you can follow developments on this hearing by typing TLiveGo on your terminal. Meanwhile, we switch gears here now to the IPO market because the buy now, pay later lender Klarna is set to launch marketing for its much anticipated IPO as soon as Tuesday, according to the Wall Street Journal. Joining us now with more is Bloomberg's IPO reporter and everything else, Bailey Lipschultz. Bailey, great to have you with us. So much anticipated. Give us some context on what that means, because we have been waiting for a while.
We've been waiting for Klarna for a while. They've been a company for essentially a decade. We expected them to go public back in April. Tariff Day kind of threw a wrench in those plans. One thing to call out, though, Affirm is the comp that Wall Street is going to use for this company. Affirm has essentially doubled since late March, is up another 12% today, trading at the highest level since January 2022. So that is a good sign for this company. One thing to keep in mind, Bloomberg had reported back in July that this was a company that was going to start marketing this deal on the road after Labor Day, at the time looking for $1 billion raise, close to a $15 billion valuation. Some of our competitors are out saying that's going to potentially be closer to $13.5 to $14 billion. Certainly one to keep an eye on, but everything in the IPO market right now, post-Labor Day, is heating up. We're expecting Klarna, Via, Gemini, Figure, a number of companies that should be starting these processes sometime next week or the week after.
But Affirm is doing very well.
Yeah.
Does that mean that Klarna is also doing well, or does that mean that there's not enough room for Klarna?
Well, their earnings, because they had to flash their numbers, so they updated their filing with second quarter results that actually were pretty good, all things considered. So when I've been talking to bankers on the deal, investors, meeting with the company and management team, they're pretty bullish on the outcome. The big question, obviously, is with a number of these IPOs, what do you launch on the cover? What are you looking to raise? And can you kind of encourage investors to walk up in size and not expedite the process, but go into the IPO listing day with a higher valuation?
And Billy, you mentioned something about, post Labor Day. This is a conversation we were having with Crystal C. actually just about an hour ago, talking about how Labor Day weekend is a big crunch time for deal makers, and that Tuesday morning could be interesting on the deals landscape, on the M&A landscape. Talk to us about the IPO market, because spiritually, the two are linked.
Yeah, when you look at when we came out of the IPO window, kind of dusting off the winter, as it were, a few years ago, we saw ARM kind of kickstart and fire starting again a few years ago. We saw Reddit and Instacart in that group as well. When we look at this batch of companies, we're talking, again, buy now, pay later company Klarna, Gemini, the Winklevoss twins, crypto exchange and custodian company, Figure, which is also kind of preaching its blockchain activity. We're expecting a number of these companies to start these processes and meet with investors, but also across the ECM suite, we're expecting some big sell downs, some convertible bond activity. It seems like a lot of activity is going to kind of start Tuesday and throughout the rest of the week.
Have you fully reacclimated from your Tokyo trip?
No. My bus yesterday into the office, 2 hours. My bus home yesterday, 2 hours. Tokyo, 25 minutes tops.
Well,
I miss it.
Don't go back there, especially not today, because Bailey and I will be doing Business Week from 2 to 3 p.m. today, and then Bailey is joining Scarlet Fu for the close.
But dude, the problem is that you moved to New Jersey, right?
Yeah.
What's wrong with that?
Well, the commute is just deadly.
I
would look at the same thing, except for I don't want to do that commute, especially if I have to go through Penn Station.
Early, it would be fine. It would be fine.
Yeah, but I'd still have to cross a bridge, and Lord knows when the governor of New Jersey is just going to shut the bridge down for whatever reason.
That hasn't happened in over a decade, okay? That was one time. Bailey Lipschultz, thanks for joining us. That is Bailey Lipschultz. You can catch him a little later on in the afternoon, and I will be with him for part of that. Do you want to talk about markets really quickly?
Yeah.
All right.
We're looking at markets down, but coming off of all-time highs, really ahead of Labor Day weekend. Maybe people don't want to be long-risk assets after the incredible rally that we've seen, and ahead of a month that seasonally is very bad for stocks.
That is true, but have a great long weekend when you get there. Don't worry about what's going on in the stock market. Thanks for joining us.
Good points, guy.
This is Open Interest.